For those of you that are new out there and you guys are focused in and thinking to yourself, oh, okay, think about this, right? I have to make $1 million overnight, or I have to make it by the end of this year. That's the mentality that will make you go broke. Always remember that, guys. It's singles and doubles. You want to get to the Hall of Fame as an investor hitting singles and doubles. You know why? Because ultimately to hit home runs means you're going to strike out. And when you strike out in trading, that means you lose a big amount of money. And that is unacceptable. That kills your account. It basically puts you back to the starting point, and it is not good for your overall health and your financial wealth.
The market is suffering from what Gareth calls a price action hangover, stating that it was fed so much action the previous week with little action this week, leading to the phenomenon he called a hangover. In this video, Gareth will be taking a deep dive into the world of cryptocurrencies and gold, specifically discussing the recent charts of Bitcoin, Ether, and gold. Gareth is well known for his expertise in technical analysis and his ability to spot key trends in the market. In this video, he'll be sharing some valuable insights and strategies that have helped him succeed as a trader. Gareth talks about his recent big loss, which he made on a trade in the crypto market. But he doesn't dwell on the loss. Instead, he shares how he was able to quickly recover from it by using proper position sizing. Gareth believes that position sizing is the key to success in trading. By properly managing your risk and controlling your exposure to the market, you can minimize losses and maximize gains. Throughout the video, Gareth provides a detailed analysis of the charts of Bitcoin, Ether, and gold, giving viewers an inside look at his trading strategy and his thought process. He explains his approach to technical analysis and how he uses it to identify key support and resistance levels in the market. Gareth delves deeper into each market, sharing his thoughts on the current state of the cryptocurrency market. He talks about the potential for each market to experience significant gains in the future and provides valuable insights on how to trade these markets successfully. Gareth Soloway is a true expert in the field, and his insights and strategies are sure to provide valuable insights for traders of all levels. So sit back, relax, and get ready to learn from one of the best in the business.
Now, this is a weird week because we don't have a lot of price action due to economic news. There is a little bit here and there, but we're not talking big inflationary numbers. We're also not talking about Federal Reserve commentary or decisions. So it's a little bit of what I would refer to as a hangover week. A hangover week means that basically you're in a situation where there's a lot of action the previous week and everyone is basically, they were drunk on action, right? I mean, it's essentially, that's the kind of analogy where this week we're like, okay, there's not a lot of action. And what you can see is you can see the price action. It's slower. This week, the bank stocks aren't going crazy. The volume on the S&P is quiet. Even crypto, I mean, a little bit of a pop today, which we're going to talk about in just 1 second, but even crypto's been a little bit quiet for the last few days or so. So again, that's what we call a hangover week, when people are kind of calm and a little bit less agitated. This is the Bitcoin chart. We are having a nice pop on Bitcoin today. Bitcoin trading up about 4.4% on the morning session, almost $1,200 from this time yesterday. Now, one thing to note here, take a look. Basically, what we're looking at is a level of support right here, right? So this is very defined, and this is the beauty of charts. It kind of guides you to support and resistance. Notice how the lows right through here are all together at this 26,700 level. That's a very obvious support level. Notice how the highs right here are all at the 28,700 level. That's resistance. Look at the high of today. It was close to 28,700 on Bitcoin. So what this is telling me, and number one, where do I get that resistance from, by the way, because this is just cool stuff. But look at this low pivot here from the bull market dip in 2021. It is exactly at that price point, 28,700. So essentially what we're looking at here is that becomes resistance. That's why price is having so much trouble getting through this level. All right. So again, that is your level to watch. Now, again, what we're doing here is we're playing pinball. All right, meaning you're bouncing here, you're hitting off here, you're pulling back, you're going back and forth. And essentially what that tells us is that the more we hit one way, the weaker it becomes. So the more we hit to the upside, there is a chance that we could break up. I've said that for a while. I said, listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. Again, that takes us back to this major consolidation area right here, as well as all of this over here. Even pre-bull market run up to 60,000, where we then pulled back, or 65, then we went to 69 and pulled back. That's that area right in there. All right, so again, the way I'm viewing this, the way I'm trading this, I have a tiny position short Bitcoin at 28,450. I will be adding to that at 30,000 Pierce, essentially. That puts me in a position to be short close to the 30,000 level. If we get above 30,000 and we stay there for a certain amount of time, like a time count, then I cover my short. All right. So this is a very calculated trade with a specific risk to the trade. Right. And that's what it's all about, folks, is that in general, we want to know what's our end game. When does our thesis fail? And that's what we're doing in this chart. That's how I'm analyzing this chart.
Gold has been a winner of late, however. We could see wild swings in prices moving forward, given the host of factors at play. Changes in the geopolitical landscape and a return of bank sector fears could push gold prices back toward the $2,000 level. Alternatively, improving sentiment may result in continued downside for the precious metal, with a short-term view likely to be more suited to the current environment. However, Gareth comments that he is very bullish on gold and will likely see it go to new levels. Let us hear what he has to say about the precious metal. He also analyzes the Ether chart.
You're in this upsloping channel, and it's a great upsloping channel. You connect these lows, that's exactly where we hit right over here. You go from these highs, and it goes right on that same incline. Notice the blue lines are parallel. All right, so what this tells us is this is a lot of resistance right here around this 1850 level. All right, if 1850 does break, and if we get above here, there's a run up to 2000. Now, why is 2000 very key? All right, the reason 2000 is key on Ethereum is because it was the highest point right here since the lowest point was put in on Ethereum back in June of 2022. So again, the lowest point was put in June of 2022. The highest point since then was in August of 2022. That's again the upside potential. That's where Ethereum will meet resistance. Would I be a shorter there? I would. The reason I would be a shorter there is because I'm the type of trader that makes a level break. Otherwise, if it doesn't break and it's resistance, then the probabilities are dictating a pullback. So it's all about probabilities. There's no, oh, I'm always bearish. There's no, oh, I'm always bullish. There's none of that BS in this chart or in any charts that I look at. It's about specific levels. And as soon as you understand that, you become free. You become free to understand that, again, it's all about the odds. You become the casino. You are no longer the gambler. And that's what it is. It doesn't mean I win on every trade. Heck, I put out a video yesterday. I lost 99% on SBNY because the Fed halted it. The government halted that stock. I was in that stock at the time. And it basically opened yesterday at I think I sold it at 58 cents. So again, I lost 99% of that trade. I'm not perfect. No one is. But the key is, how much did I have invested in that trade? 1% of my portfolio. If you had $100,000 yesterday, you would have had 99,000. In addition, we closed out an Alibaba trade, 3.6% of our portfolio. Boom, we made back almost 50% of that loss right there. So it's all about position sizing. Let's take a look right here at gold. Gold's pulling back. Now, gold's had a great run. There's nothing to take away from gold here. You guys know I continue to be a huge bull on gold. But we are short-term extended here. We might need to consolidate a little bit more. After consolidation, is gold going higher? Absolutely. You're looking at a double top coming up. That's your next target at 2075. So essentially what I would say to you, or what I'm saying to myself, is that I am buying pullbacks. If we get a pullback in gold, I'm a buyer of gold. The chart is an amazing bullish. Look at this sideways bullish consolidation for the last 2+ years, the last 3 years. That is amazing. Last year in 2022, everyone was like, oh, gold is coming down here. It's not performing like Gareth said. By the way, it still beat the S&P and Bitcoin by a mile. But the key was, look at the dollar. The dollar was up 20%. 20% on the dollar, and gold was down for the year maybe 5%. That tells you huge accumulation. In fact, I did interviews where I said, guys, when the dollar is up 20% and gold doesn't decline by 20%, it tells you big money is buying. Don't be a fool. Follow the big money. There's a reason why big money is big money. It's because they know what the heck they're doing. And so ultimately, that's the key. And now we see this big move up this year. Look for it to attack 2075. My target for the end of this year is well north of 2075. Should be, again, potentially $2,300. Once we break out above 2075, that's your play. Look to buy miners on pullbacks. The miners will do really well this year because inflation is coming down. Last year, inflation was 9%. And you know what sucked for the miners? The fact that we saw inflation high and gold price was not going up. So they were basically making the same or less on selling their gold that they were mining, but all their costs were up precipitously. That was a bad recipe. That's why the miners underperformed.
Russian central bank announces gold purchases. CBR announced last week that it has topped up its gold reserves by 1 million ounces since the Ukraine war began 13 months ago. This is equivalent to 31 tons. Originally, the CBR was not planning to buy any further gold. However, it has seen itself forced to do so to support the domestic gold industry, as Russian gold producers are having problems selling their gold. Russian banks, which previously were the most important buyers, have been hit by the West's sanctions. In other news, crypto trading platform Beaxy has officially closed its doors as the U.S. Securities and Exchange Commission charged the company and its founder, Artak Hamazaspian with operating an unregistered exchange and brokerage. The agency said Wednesday in a statement. The SEC also accused Beaxy Digital of illegally raising $8 million in the offering of unregistered security with its BXY token. The agency additionally noted Hamazaspian misappropriated at least $900,000 for personal use, including gambling. Wendy Incorporated took over the platform in 2019 after the founder misappropriated money, according to the SEC, and managers Nicholas Murphy and Randolph Bay Abbott maintained Beaxy for trading crypto assets that were offered and sold as securities, the SEC said. So the agency is also accusing them of violating securities law by operating an unregistered exchange, broker, and clearing agency, though the platform was described as defunct in another SEC case last year. As opposed to popular belief, the contagion keeps spreading and rumors of Operation Chokepoint 2.0 keeps getting real as a wide range of crypto banks and platforms keep getting fired at by regulatory bodies. What do you think of the chart analysis? Let us know your market predictions in the comment section below. Make sure to like this video, subscribe, and turn on post notifications. Thanks for watching.